talking to. Just know I ain't no regular fool. Could be anything in the world, but I can never.
Good morning, everybody. It's Tuesday, April 27th. Me and Jay are going to cover some Tesla earnings. Can't find the full quarterly statements. That's how they tend to do it in the U.S. But they gave us a nice little deck. Elon had some comments. Going to play those. Watching them last night with my man, young Justin, having some laughs. Seems to be the talk of Twitter. So we're going to get into that. We're going to talk about Endeavor Group Holdings. That's Ari Gold's company, is heading public on Thursday. Going to go through the S1, give some high-level thoughts. And then there's a bunch of stuff that's happened in the Canadian small cap world. So buckle up. Let's get started. So please don't mess up the mood. Jason, sweet Jason, how do you do?
Good morning. I got so much on the go here, I nearly forgot to actually post our content live today.
Oh, well.
Despite you reminding me not even 5 minutes ago.
Yeah, I could see you got a big cup of Joe there. What time do you usually drink coffee till during the day until you've had enough?
Well, my first alarm goes off at 4:30 my time. I'm lucky if I get the chance to make a cup by 9 a.m. my time, which is 11 your time. Mm-hmm. So yeah, that's my morning literally every morning. In fact, I have a meeting with writers at 8:30 every day, and I'm typically late because I'm so behind every morning.
Well, that's the news media world, baby.
Yeah, exactly.
So there's some big news last night. Our fine friends over at Tesla put out earnings. Let's give this a listen here. This is the Tesla earnings call. This is
let's jump right into it.
Elon's opening remarks. Let's kick it off.
And expectations as of today. Actual events.
Reduction in demand in the first quarter, and we saw an increase in demand. That exceeded the normal seasonal reduction in demand in Q1. Model 3 became the best-selling mid-sized premium sedan in the world. In fact, I should say the best-selling luxury sedan of any kind in the world. The BMW 3 Series was, for the longest time, the best-selling premium sedan. It's been exceeded by the Tesla Model 3.
So he's saying it right there. Model 3, the best-selling sedan in the world. That's got to hurt, Jay.
Not really.
Let's keep going.
And this is only 3.5 years into production and with just 2 factories. For Model 3 to be outselling its combustion engine competitors, I think is quite remarkable. In the past couple of quarters, we delivered roughly 250,000 Model 3s, which translates to an annualized rate of 500,000 per year. When it comes to Model Y, we think Model Y will be the best-selling car or vehicle of any kind in the world. And probably next year. So I'm not 100% certain next year, but I think it's quite likely.
If it maintains its growth, he's right.
That in 2022, Model Y is the best-selling car or truck of any kind.
Sorry, what did you say there, Steve?
Based on like my high-level search last night, it sounds like if it maintains at this level, and we'll pull up the numbers in a minute, that sounds like it is achievable.
With regard to full self-driving beta continues to make great progress. But this is definitely one of the hardest technical problems that exists, that's maybe ever existed. And really, in order to solve it, we basically need to solve a pretty significant part of artificial intelligence, specifically real-world artificial intelligence, and that sort of AI, the neural nets need to be compressed into a fairly small computer, a very efficient computer that we've designed, but nonetheless, a small computer that's using on the order of 70 or 80 watts. So this is, I think, a much harder.
That's a terrible public speaker. I can't hear you. You're muted.
He's actually normally quite stronger than this.
Yeah, like I
This
have
is-
to say, the whole Musk loves to have a Tony Stark persona about himself, but I will say that lately his speeches have been poor quality at best. Like it's worse than Trudeau with the uhs and ums.
We're about to enter the no spin zone here, where he starts to just babble. But this was a particularly terrible performance for Elon. Let's keep going.
Problem then if you were to use, say, 10,000 computers in a server room or something like that. This has got to fit into a smallish brain. And this, I think, with the elimination of radar, we're finally getting rid of one of the last crutches. Radar was really it was making up for some of the shortfalls of vision, but this is not good. You actually just need vision to work, and when vision works, it works better than the best human. Because it's like having 8 cameras. It's like having eyes in the back of your head, the sides of your head, and 3 eyes at different focal distances looking forward. This is, and processing it at a speed that is superhuman. There's no question in my mind that with a pure vision solution, we can make a car that is dramatically safer than the average person.
It seems like we've had these moments where we've gone on air where like somebody brings me something that just happened, like, a financing that got screwed up, or some sort of problem right before we go live on air, and it really throws us off. I feel like Elon had that moment this morning. Yesterday afternoon.
Yesterday, yeah. Let's be clear here. None of this should be new information to him. The stuff he's talking about right now in terms of removing radar and all that happened a while ago. It wasn't like it happened yesterday. Like right now, it's really hard to imagine why so many people believe in this guy like he's a god, because right now I feel like I know I'm not a strong talker in a lot of sense, and I feel like I'm just as strong as he is in this, and that's not a good thing for one of the most valuable companies in the world. He's not selling anyone right now. I'm surprised this thing didn't fall further.
Let's take a look right now. How is the stock doing this morning here? I'm going to pull this
It was down earlier. I saw a comment on Twitter was that shareholders are testing liquidity of the name right now.
They're testing liquidity of the name.
Yes, as in they're selling. Down 3.5%.
What's all that coming from? I'm seeing a bunch of jokes online about that, specifically that they're testing liquidity. Shamath or whatever his name is. What's that in regards to?
I honestly don't know. I've only seen it once or twice, so maybe I'm outside of that inside joke at this point.
Yeah, it's hard to keep, like, we follow this stuff for a living in some of the stuff.
It's hard to keep up, quite frankly, right? Like yesterday, I was busy working away on other things. I forgot about the Tesla earnings, so I spent half an hour scrolling back through my Twitter feed, watching the live commentary from the earnings call. And the live commentary, truth be told, I follow a bunch of bears, and they made it sound like he talked better than he did.
Look, the stock's down 2% today, but if we look at the EV space, I don't know that that's
3.5%, buddy.
Oh, sorry. Up here it's saying. So I'd not say. I don't know how to use this trading view. I'm new, guys. Yeah, you're right. 3.5%. So it is amongst the worst. So clearly the earnings were not beloved by all the fanboys. So what did they talk about? For one thing, he said that their chip shortage was a huge problem, which was mostly due to the supply chain problems. They expect.
He also said manufacturing is hard several times based on the commentary I saw on Twitter, which I'm sorry. If you're a $700 billion company, you should have this figured out by now. Like, excuses work when you're first starting production, but at this point they don't. Can you imagine if General Motors came out and said, "Oh yeah, guys, we're struggling. Production's hard."
It is hard.
Absolutely, it is hard. But to blame everything on the same thing, it's ridiculous.
That's the point that I keep making about all these startup EV companies, is that making cars at scale is really, really, really hard. It takes a lot of money. It takes a lot of trial and error. It takes a lot of expertise. It takes a lot of experience. The fact that Tesla has accomplished what they have, valuation aside, Elon theatrics aside, is really impressive.
Oh, I'm not disagreeing there. And I mean, I'll be honest. I used to be a fan of Tesla until you start to see the other side of things, right? A few key takeaways for me from what I saw on these results. First and foremost is Model S production is still not happening, despite on the Q1 call, Musk said that production was about to fire up and would be going in February. He said basically the same thing on this call, which means production was not happening like he said it was. On top of that, there's autopilot is a sticking point for me. They started collecting money on full self-driving back in 2016. It's still not there. And yesterday he said that they're still trying to figure it out. But yet there's people that have had 3-year leases on these vehicles that never got their product, and they're not going to get that money back. Like, it's vaporware, and I take a huge issue with that. Outside of that, let's talk about his Bitcoin theatrics. So for those of you that do not know, which is probably few and far between, Tesla famously bought, I think it's something like $1.5 billion worth of Bitcoin during the quarter. And they acted like it was a long-term thing. Yesterday, it turns out that they sold
10%.
200 and some $million worth while making a profit of $101 million on that sale. Now, that profit of $101 million from Bitcoin, which is unrelated to their actual business, is what enabled Musk to receive an $11 billion option package. That is billion with a B. I'm not misspoken on that. I take major issue with that. It's like, Steve, when we were talking about this yesterday, effectively what you said is he buys it with Tesla's money, pumps it with his personal Twitter feed, then sells it into the pump, and because of that, he now gets an $11 billion options package. That's so unethical. Like,
here's an article from Hermina, who did a great job, by the way. Hermina, if you're watching, Tesla's net income soars to record $438 million. There's just one catch. This is Hermina's take. Following market close on Monday, Tesla released its financial results for the first quarter, surpassing consensus estimates. However, it also turns out that the company's revenues were largely generated from the sale of regulatory credits and Bitcoin, rather than its core business, which is manufacturing and selling electric cars. Great point. Great intro. Elon Musk's company reported a profit of 93 cents per share, significantly surpassing estimates. Similarly, Tesla's first quarter revenue rose by 74%. Big top line. And in a frothy market, you love seeing that, exceeding estimates that called for revenue of 10.3. The company's free cash flow rose to $293 million, beating estimates of $82 million. Despite the positive earning results, though, Tesla's business model appears to be running into a problematic scenario. That is, it's not actually earning any money from the sale of electric vehicles, but rather from regulatory credits and digital currency sales. According to the company's financial summary, income from operations totaled $594 million. However, the sale of regulatory credits were up from $401 million in the first quarter of last year to $518 million between January and March 2021, the highest on record.
You know, one thing I'd like to receive color on is who's buying these regulatory credits from Tesla. That's a genuine question of mine.
That is a good question.
Like, is it SpaceX buying them, or is it an actual unrelated party buying them?
Mm-hmm. I don't know. I don't know the answer to that. If anybody in our audience is watching and you know where they are selling these EV credits to, please let us know in the comments. So, GAAP net income totaled a mere $438 million. It means that Tesla did not generate any meaningful net income without the help of regulatory credits. On top of that, Tesla owned $1.3 billion in digital assets at the end of the quarter, of which it sold $271 million in Bitcoin, amounting to a profit of $101 million. Although it can be assumed that it was all Bitcoin, it remains unknown how much of the EV makers' digital assets were comprised of Musk's favorite meme currency, Dogecoin. So we can see here, is it possible for me to, let me try to zoom in here so we can see this a little bit better. Of course, it's not letting me do that. Restructuring and
I can see
operating expenses, $101 million. So that shows it right there. That's your outlay. Now I'm assuming, did they actually put out the full financials, or did they do that thing where they just kind of put out the deck? That sort of showed it.
Put on the deck, as far as I'm aware.
So I was looking for it. I couldn't find it anywhere. Which, yeah, I mean, that's pretty significant. If they made, what does that work out to? They made a profit of $101 million in Bitcoin, plus the selling these EV credits for $500 million.
Where are they really generating income from? I think one person on Twitter actually said that they'd be better off closing their electric vehicle and everything else, the divisions, and effectively running as a financial house.
But because of the Bitcoin, or
because of the Bitcoin?
Well, I mean, the EV credits are pretty large. Let's continue to go through this whatchamacallit, the deck here that they put out. Go through some of the numbers, because it's the challenge I have, and this happened in small cap, which is what I primarily care about all the time, which is this. Sometimes these things just get way ahead of themselves, right? And in terms of valuation, so I'm talking about the valuation of this stock got so far ahead of itself that it doesn't make any sense. And an example that's near and dear to our Canadian audience is what happened with Canadian cannabis stocks, right? There was a reason to get excited about it. There was a great opportunity. And at some point, the valuations just got too high. And from a risk reward scenario basis or profile basis, it made no sense to own these things, right? Like if Canopy was trading at a $200 million, $300 million valuation today, I can make a strong case that now, look, obviously the balance sheet, that my statement doesn't really make any sense, but let's just say maybe, I don't know, on an enterprise value basis, that's what it's worth with the opportunity that they have in front of them. I can make a strong fundamental case to own that. But when it's trading at, $5-10 billion, there's just no way that makes any sense. Same with Afria, same with Tilray, same with Aurora, etc.
Same with Kronos. The amount of market share that Kronos has is just unbelievable.
Okay. So
anyways,
the point that I'm getting at here is that with Tesla, they consistently have improved. And I know you don't like to hear that, but the reality is here, look, they did $9 billion in automotive revenues last quarter, in the first quarter of 2021. That is awesome. That is fantastic. Tip my hat to them. Great work. The problem is there's no fucking way this thing commands a $700 billion valuation.
Yeah.
They're standalone companies that I'd rather own Iguana Technologies for the residential storage, which I do believe is a big opportunity. I can buy them at $150 million market cap, right? And they're as far as I can tell, they're going to be just as competitive. Don't like that space. There's other ways to play, or don't like that name. There's other ways to play the space, whether that's Solar Edge, Enphase. There's other names you can grab. Generac, doesn't matter.
So here's the interesting thing I see about Tesla. They pull out the automotive revenues, but they don't pull out any other division. Like, why are we not seeing their solar division or their energy division?
Well, so I commented to a large shareholder of Iguana about this yesterday. I said, why is it that I can't see the number of power walls they sold? Right? Like when I pull this up here, right? Like they talk about how many megawatts of storage they deployed. Right?
Solar deployed 92 million, storage deployed 445.
Which is a lot. That's a lot. But
actually, that's a Sharp decline.
It depends on the projects they're working on, right? Because they're doing these large commercially scaled projects. This tells us nothing about how many power walls they deployed.
Oh no, not by any means. When I
Because,
think Powerwall, I think of residential, right? So to go from 1,500 to 445, that's a sharp decline.
Because if these were power walls, that would be close to 90,000 power walls, right? And they just didn't do that. There's just not that many storage units being deployed in the U.S. right now. Which is a metric as an investor or a potential investor, I would like to see. So that they are trying to conflate that a little bit, and we're seeing it, right? Canaccord, who for some reason covers Tesla, they put out a 150% price target based on the company's storage capabilities, which I believe is a massive opportunity. But is it worth $300-400 billion in valuation? No, it's not. Like it could be one day, but that's not.
But
anytime
it could be
soon.
one day, but the company itself sees it as insignificant at this point based on how they structure this presentation.
Yeah, so let's keep going through this here. Vehicle capacity. So here they kind of break down their competitors. 98% of cars right now are ICE. What's the problem with this little pie diagram of comparing Tesla to the ICE competitors? All the ICE competitors are switching over to the EV model.
Well, that diagram's weird. What cars do Tesla buyers trade in? Toyota, Honda, Ford. Yes, but have you also looked at... They try to make it look good, but at the same time, Toyota is one of the largest automotive manufacturers in the world. So that just makes sense.
Yeah. It does. Look, they're trying to give us information, things to look at. I don't know. Keep going here. Autopilot and full self-driving. Our team continues to focus on the V9 version of FSD City Streets Beta, which will soon become more widely available in the United States. We believe that a visionary-only system is ultimately all that is needed for full autonomy. Our AI-based software architecture has been increasingly reliant on cameras to the point where radar is becoming unnecessary earlier than expected. As a result, Go ahead. Yeah, you take it.
What's the number one issue with this slide when you look at it?
When I look at this, there's a lot going on here. You tell me what you're seeing.
So my issue is the last slide was about vehicle sales, but yet the chart for vehicle sales is on here right next to autopilot and full self-driving. Like it has nothing to do with what global premium vehicle sales has nothing to do with autopilot, full self-driving, or their core technology, right? Like on this slide, I want to see how many miles that autopilot's done or full self-driving without disengagement.
So you're calling this a deck foul?
I am. I mean, I'm critical of Tesla, but I also expect the best of Tesla when you have the market cap they do.
Yeah, I think it's a little bit nitpicky.
Yeah, you're a Tesla fanboy, so we're on the opposite sides of the spectrum.
That's fine. Energy storage here. Energy storage deployments grew 71% year over year in Q1, mainly driven by the popularity of the Powerwall. Demand for Powerwall continues to far exceed our production rate. As a result, we recently shifted Powerwall deliveries to solar customers only. That is right, folks. If you want a Tesla Powerwall, guess what? You better buy our shingles. As a result, we recently shifted Powerwall deliveries to solar customers only. As we increase our production rate, we may make it available once again as a standalone product. The recent snowstorm in Texas and other blackout events continue to drive customers toward home energy storage solutions. If only there were a company that offered standalone energy storage units. Anyway.
So here's a genuine question. First sentence, energy storage deployments grew 71% year over year in Q1, mainly driven by the popularity of Powerwall. Demand for Powerwall continues to far exceed our production rate. So why would you make it so that anyone buying solar now needs to buy the Powerwall? Are they inadvertently saying that their solar is not selling?
No, because what they're inadvertently saying is that they can't produce enough batteries So they're going to gouge the excess demand by saying you better buy our solar panels as well if you want access to one of these power walls, which is it is an issue right now is supply chains and making sure that there's ample product available.
I also noticed yesterday there was an article, I think Inside EVs put it out. The cost of a solar system from Tesla has doubled over the last while. And they had so many pissed off customers, they've started giving out free power walls to those customers because there's people with signed contracts that they still somehow managed to double the price on, and people were walking away. So Tesla started giving out power walls for free to those customers, which doesn't jive with demand for Powerwall continues to far exceed production. But
volume. We plan to grow our manufacturing capacity as quickly as possible over a multi-year horizon. We expect to achieve 50% average annual growth in vehicle deliveries. In some years, we may grow faster, which we expect to be the case in 2021. The rate of growth will depend on our equipment capacity, operational efficiency, and capacity and stability of the supply chain. We have 50% they might be able to pull off for one more year, but at some point you're going to see these big auto companies come online with EVs. So people who really are EV focused are, there's going to be a good amount of competition.
I'm very skeptical of 50% average annual growth over multi-years. The electric vehicle market will start to get saturated in a hurry. And at that point, it'll be hard for any one company to stand out in my mind. But Tesla does have a lot of brand recognition. There's no doubt about that. So they might be lucky in that regard.
So we could see here, where would the Bitcoin sale have gone into? Would that have been the other income?
I believe it was, yes. Restructuring and other 101. One up.
Okay. And that's why that would normally be a positive figures negative. It somehow got included as an operating expense.
So energy storage looks like there's solid growth occurring in that segment, which is interesting to me. This last quarter is down, but it seems to be kind of a cyclical business.
Mm-hmm. Okay. Well, revenue's grown tremendously. It's actually down quarter over quarter, but up tremendously year over year. We can see. Interest
expense is pretty. Don't they have a massive balance sheet? Why are they paying so much in interest?
Did they give us the balance sheet here? There it is.
Yeah. So they've got $8 billion in cash and 17 billion in cash and cash equivalents, but they spent $100 million on interest.
Yeah, because it's cash flow management is not it's not as simple as running your household. It's a lot of moving parts. But to be honest with you, I haven't done a full deep dive into the cap structure.
I know you haven't. I'm just pointing out interesting tidbits I see.
Yeah, we can see the statement of cash flows here. I love seeing this. Like this is great. This is fantastic. They're generating. By the way, and this is a message for all you Tesla bears out there. You guys said that they would never get to being cash flow positive. Well, look at this. This is 4 straight quarters of positive operating cash flow. I'm not saying that this company. Again, the valuation. It is what
the valuation doesn't make sense, but that's because of Gamma. You and I both know that.
Well, it's still though. I mean, from an operating cash flow standpoint, in the trailing 12 months, that's like they're nearly at what's that, $8 billion. You want to put a 20 times multiple on that? You're at $160 billion. It's actually like okay.
Yeah, but it's still 5 times that.
Yeah, no, I agree. There's not a lot of upside there, and the part that makes me a little bit nervous is how much more growth is there until they hit a wall when every other automotive company that already has all the infrastructure in place to compete against them, right? Big Auto. A little story here. When I used to work at a GM factory, they ended up having to change the name of, I think it was the Buick LaCrosse They had to give it a different name in Quebec because lacrosse is bad slang, effectively meaning to masturbate in Quebec. Seriously, Quebec slang.
No, I knew that.
And they had to change the name of the Buick Lacrosse just in Quebec. And this like really was a problem because it's such a big bureaucratic structure that it takes a while to move. But all these companies, they're moving in that direction, right? So it's coming. And I like the challenge becomes when I look at, this growth profile, which is really impressive, right? Like this is a very impressive growth profile. I have to wonder at what point does that 50% annual revenue growth look like a negative number, right? Because you're going to have all these other behemoths coming at you. And if you're going to give this thing, let's say it's trading at, it's trading at like 100 times cash flow with an actual cash flow number. So it's not one of those like bizarre numbers, operating cash flow, that is. So, I mean, how much more growth is there really in this growth profile to make me feel like I'm comfortable? And maybe in this market, I'm happy to pay 20, 25 times operating cash flow. But also, these are automotive companies. There's a lot of expenses that go into building plants and manufacturing, right? Like, let me pull this up on
Well, you got that up. One thing I'll point out is, I mean, to me, the natural thing for someone like to do would be, as that happens, you scale up the energy generation and storage so that you can constantly tell the growth story, right? We all know that these equities are moving on a growth story. But if you look there, I just noticed this now while you were talking, energy generation and storage, revenue is $494, but the cost of revenue for that was $595. Last quarter, it was revenue is $752, but it cost them $787. It's been 2 quarters since I've seen any positive gross profit from the segment, and even then it was thin. So to me, the energy generation would be the natural pivot, but it'll be hard to pivot when you have numbers that post negative gross profit, right? So I don't know what they'll do.
I'm going to pull up here the just give me a second. I'm going to pull up the this on Y charts. Here we can see this. What are the publicly listed names that are conventional auto companies? Ford, Chrysler, Volkswagen,
Toyota
Motor Company. Is Honda public? I don't think they are.
They're all public. It's whether it's on the US.
Any other big names I should have here?
General Motors.
General Motors will be there. Okay, so we've got a whole bunch of names.
Oh, sorry, I thought you had Tesla in the background there.
Okay, so this is to look at conventional auto companies and where they trade, right? And the reason that I bring this up is that if we look at them to, on a pure valuation standpoint, notice how they all trade at these drastically cheap EV to EBITDA multiples, right? Like,
actually, Ford's an outlier there.
It's probably because my guess is that they had something that pulled their EBITDA down in a recent quarter, and that's why it appears that way. But what I'm really getting at here is when I look at this, and I'm speaking specifically of these EV to EBITDA multiples. The reason that these things trade at these cheap valuations is primarily because making cars is really expensive. Like, you can't look at it on an EBITDA or an operating cash flow basis. So what's Tesla doing that's going to make it so that they command these kind of multiples? Right? Like
it's a tech company, not a car company.
But the vast majority of their revenue, let me pull this up here, right? Like when we look at this revenue here, right? Five, or like in the last quarter, 93 of 10.7 came from automotive. And I don't even know about the services and other. I'm sure that there's some automotive there. So you're still above 90% of that revenue on a $700 billion company is coming from automotive revenue. Make no mistake, it's an auto company.
Oh, absolutely. But when I say tech, I am referring to look at full self-driving, look at autopilot, and just look at the cars themselves when you go inside, right? Like, this isn't a conventional car by any traditional standards, in the sense of if you want to do anything, you got to do it from a computer screen, right? So that's where they're trying to get the tech multiple.
Mm-hmm. Okay, so let's
Is it appropriate? I don't think so, because I mean, look at the tech in any vehicle these days; they all have tech.
Let's move on here. By the way, I don't know that I should say this on air. Quite frankly, I don't know how many people actually watch this show that would care, but I was hearing rumors that there's some stuff going on with Fuel Positive. So let's keep an eye on that name. Do you guys have any thoughts or contacts with Fuel Positive Corp? So JTD, I don't actually know anything. I like the ammonia space. I think it's fantastic. I just heard something last night. Somebody called me, said that there's stuff going on there. So could be some news coming up. I actually wasn't told what it is. I don't know anything. I just, we hear things. So keep an eye on that name. I do like the ammonia space, though. I think Jay does as well. Ammonia is
in yesterday. No, not Fuel Positive, but in the space.
Yeah, ammonia is the cheapest carrier of hydrogen. Okay, Endeavor. So let's take a look at these guys briefly here. Endeavor. This is the Ari Gold Hug It Out Bitch public company. So they own IMG, UFC, and UME, and among other things. So this is their S1. They're going public on Thursday. Yep.
You've got EDR there. That's actually Endeavor Silver.
Okay. This is what does the S1 say? Did they not put a symbol here? I Googled this right before going live. Symbol. Oh, symbol EDR. Is Endeavor?
Oh, sorry. That's TSX. I apologize.
That's what I was gonna say that, but okay. Yeah, we're looking at NYSE stocks now.
Well, we're Canadian focused. Give me a break.
Okay. I'll give you a break. So they actually break down how many shares out based on what price they're ultimately able to do the IPO at.
So break it down for me, Steve. What is Endeavor? What do they do? Who do they own?
Okay, so they own the UFC. Perhaps you've heard of the UFC. It's like all these guys. They get into a ring, they fight, they wrestle, they try to basically kill each other until somebody taps out.
Yeah, my wife actually has a cousin in it, or who was in it. He was terrible, but he was in it.
Hopefully he doesn't watch this show. I'm gonna call after. This is William Morris Talent Agency, UFC, the Professional Bull Riding League.
PBR.
Yeah, there's another one.
That's interesting.
Oh yeah, they lost a tremendous amount of money last year because everything got crushed.
Oh yeah, absolutely. I didn't get to go on my rodeo, so
no, I was referring to Endeavor, but
gotta keep it small town.
Yeah, I was referring to the fact that TV shows and movies weren't really being produced for the last year, which really screwed them up.
So you say talent agency. What specifically, in terms of talent, what type?
Have you ever seen the show Entourage?
No, I haven't. You talked about this at length yesterday, and I actually have never watched a single episode. I only know the name, and that's it.
They actually break it down for us nicely. So, like, pretty much, agents get paid for placing actors and actresses in movies and TV shows. So this is kind of like the Remax, but instead of buying and flipping houses, they're buying and flipping acting gigs and taking a small percentage of that. And if you look at it based on where they break that down, it represents about 36% of their overall revenues, along with IMG.
I like the 2019 revenues, not 2020.
Yeah, that's
We all understand it.
They actually tried to IPO in the fall of 2019 and failed.
Oh.
So I got a feeling that they just this company that's going public at $10 billion just used the same documents that they used from a year and a half ago. But you can see here, 20% of the revenues comes from the UFC, EuroLeague basketball, PBR. I
can't believe you didn't open the show with some professional bull riding. Well, once this lockdown's done, you're coming to Saskatchewan for a good old-fashioned rodeo.
Oh, man, so this company is based on Ari Gold's character. We've reached that point of the stock market bubble where a character from Entourage is now a real thing. I'm kidding. I'm being cheeky, folks. But let's try to pull up some of the financials here. This is the S1, where they break it all down, and we could see here that they here's your share structure. So Silver Lake, my understanding, and this isn't in the S1. This was in an article that was, I think, on Bloomberg. They talked about how the company's actually part of the reason that they're doing this IPO is they currently own 51% of UFC. They're going to be raising cash to buy out Silver Lake and related parties who own the other 49% of UFC. So you can see the share structure there based on post-transaction.
My big question here is obviously what did they pay for their stake? That's always important with these.
Yeah, well, this is a I don't know how I feel about this. This is an odd duck business. It may be valued properly, and I'm trying to find the actual. Do they break down the ownership percentages here? Yeah, they kind of break them down here. Let me see if I can.
At the end of the day, I think anyone investing in Endeavor is making a bet on the end of the pandemic. That to me, that's really what this comes down to.
And it's an interesting bet at that. Let me try to pull up the financials here. Gotta love these U.S. documents. Here we can see 2020 they did $3.5 billion of top line revenue.
That's really not bad considering. I mean, look at 2018 comparatively. It's not that bad.
So 2019 they did 4.6 and lost a tremendous amount of money in both 2019 and
that's a lot of interest. Holy man.
Claiming I know your favorite number here, adjusted EBITDA, $500 million. And I know how much you love adjusted EBITDA.
Yeah, we made $500 million on an adjusted EBITDA basis, but on a net income basis, we lost $625 million.
Quite a bit of cash there on the balance sheet. Here's your adjusted EBITDA figures.
See, my issue with adjusted EBITDA is the whole backing out interest expense. Because that's an expense that's non-trivial in my mind, right? Like depreciation and amortization, I get it. That's an accounting term effectively, but interest, you're still paying the interest.
Yeah, my issue with this business here, I don't understand it. I'm just a lonely boy from Toronto. I don't know what the Hollywood Hills are like, but it seems like a little bit of a Frankenstein. Like, why does a talent agency, also owned by the same company that owns UFC, that owns professional bull riding? Like, it just seems like it. Like, is this like supposed to be the Berkshire Hathaway of entertainment or something?
I can see the argument for. Here's why I think UFC and PBR actually makes sense. Because while they are both sports, they are individual sports. As in, you can make an argument where, okay, you're a top level athlete in this, but you're going to sign our talent agency so that we can use you to sell advertisements for marketing, etc. Right? And then you have the talent agency, so you do the other spaces. The thing I get hung up on is the EuroLeague basketball. That seems out of place to me more than anything else.
Yeah. I don't disagree. It's, but to me, this, they unsuccessfully tried to IPO in 2019.
Do we know what hung them up in 2019?
That's a good question. There's not really a lot out there. This is so far. I mean, look, I'm SmallCapSteve. This is a big cap. They're valuing this thing at $10 billion. I'm out of my league here. But hey, I mean,
the honest truth is, I think you might command a higher premium for UFC as a standalone, and that's only because it's fully unlocked. It's not being grouped with everything else, so investors focus on UFC and UFC only, right?
I agree.
We see how many instances of where these big corporations spin out an asset, not because the asset isn't performing, but because the asset's not being fully appreciated. And I think this might be an instance of that.
I fully agree with you on that. I think that
I can see UFC with a good marketing campaign, you could probably get 15, 20 million or 20 billion out of that alone. But when you mix it with everything else, it actually brings it down.
Yep. I don't disagree with any of that. Here's the I would be a lot more interested in investing in just one of these companies where I can sit and wrap my head around it. The problem is that you're investing in a group of businesses where, I mean,
it's the same reason project generator mining companies don't have huge valuations despite having some great properties sometimes.
Yeah. And who knows, perhaps down the road they end up spinning UFC out. It will be kind of fun though if we're actually able to break down the individual income statement, and if they segment it nicely for us to try to understand UFC's business and try to value it. But this is an interesting name. I don't see a lot of talk on social media about it. Who knows? Maybe they end up pulling the plug on this. I don't think it's too late, but I'm going to call it his name.
Put it this way: UFC. You can have ticker symbol UFC. On top of that, you're called UFC rather than Endeavor. Was it Endeavor something or other?
Endeavor Group Holdings.
Endeavor Group says nothing about what they do. That's a terrible name in that respect. But it's because they are like the Berkshire Hathaway of things, right?
Yeah, the Berkshire Hathaway of entertainment, but feels a little bit like a Frankenstein as far as I can tell. Okay, let's wrap it up here. What's going on at the dive this afternoon?
This afternoon, I'm behind on analyst consensus estimates. Young Justin has made a mission of it to report consensus estimates for a ton of major companies this week. So I am trying to get those pumped out as fast as I can. On top of that, Hermina has been crushing things lately. She had some great content this morning. I know she's got some in the backlog right now. Can't remember what specifically it is. We have Russell Starr on in 40 minutes or so here discussing crypto and the impacts of Coinbase on that, among other items. Outside of that, I need to get something out that was assembled by a writer on Friday that it's just got pushed to the back when it should have been on a junior miner up in Alaska. I said that weird.
You said Alaska.
Alaska.
Too much Elon.
Too much Elon. Yeah, lots going on. I am swamped. It's one hell of a week for me. So
okay, well, look, I can tell. We were in a meeting yesterday with a publicly traded company where I actually saw you fall asleep during the Zoom interview, and.
What are you talking about?
Oh, it happened. It happened in front of the founder of a company and the CEO. Look, it happens. I mean, you work hard. Sometimes those things happen.
I actually don't know what you're referencing. We're having a chat after the stream.
Oh, look, guys. Not that we talk about on the show is designed to be financial advice. Not what we do. We're not licensed. You look for that sort of thing, go find somebody who's licensed. Nothing's a buy recommendation. Nothing's a sell recommendation. Nothing's a neutral recommendation. There are no recommendations other than I do recommend the cheesy gordita crunch at Taco Bell.
And you know what? I'm going to make a recommendation as well. Uncle Buck's braided pretzels from Bass Pro Shops. I've been eating these like candy the last few days. Delicious.
Oh, you're a bit of a hick. Look, guys, you can spend your last hour staring at any screen, any place in the world, but you chose to spend it with us. I sincerely appreciate that. Tomorrow, we've got one of the big wigs from SEMrush coming on, who went public on the NASDAQ a couple of weeks ago. I think he's a really interesting name. We're going to get into the analytics of the internet with a company who's pretty much scraped keywords on all the major platforms. I want to talk Tesla and all that stuff. JTD, I would love to see more yoga pants on the show. And of course, go Blue Jays. I don't know who's pitching tonight, but
they're playing again? How many times do they play a
week? 162 games a year. So on average, I expect them to play 6 games a year.
6 games a year?
Yeah. Sorry, 6 games a week. 6 games a week. I'm new to this radio stuff. Give me a break. All right, everybody. We'll see you tomorrow. Thank you for joining us.
The top is a better view in it. I'm not surprised at all. No, it ain't what you need. Come on, just pay.